Hello, I'm Natalie Kenway, Global Head of ESG Insight at ESG Clarity. Welcome to the Green Dream video series where we interview senior members of the responsible investment industry. Today, I'm delighted to be joined by Andrew Lake, Head of Fixed Income at Mirabaud Asset Management. Thanks so much for joining me, Andrew.
No, thank you for having me, Natalie. It's good to be here.
So first of all, can you give us an overview of the developments in the sustainable fixed income markets over the past year?
Yes, sure. I mean, for fixed income generally, it's been a time of quite a lot of change, and I think certainly for sustainability, we've seen a great deal of market enhancement or development within the fixed income field. So we've definitely seen an exponential growth in the sustainable debt market. It's now reached $1.7 trillion at the end of 2020. With almost 10,000 instruments now. So it's a real market. The market is growing exponentially. Green bond issuance is now at 1.1 trillion, which it reached in early 2020. So we're seeing a development, an enhancement, a sophistication of the sustainable bond universe within fixed income. And I think a lot of that has been accelerated by obviously what we've seen with the pandemic. We've seen more social bonds, we've seen more green bonds, we've seen a more focus upon sustainability generally. And I think that whilst fixed income was perhaps seen as behind the equity markets in terms of the development of sustainability, both from an SR and ESG perspective, certainly I think we've now caught up, and that's been obvious with the number of new funds and the depth of the market that we've seen develop over the past year or so.
There's certainly been a lot of fund launches to cover. In terms of breaking that down, the social issuance compared to the green bond issuance, how does that compare? I think, like you mentioned, last year there was an uplift in social bond issuance around the COVID-19 pandemic. And has that continued? Or has it caught up with green bonds?
It has. I mean, it's grown exponentially. Obviously, when we think about social bonds, so financing social projects, food security, poverty, actually access to education, and so forth. We've certainly seen a number of issuance that have been COVID related. So specifically aimed at mitigating COVID-19 related social issues. The EU has issued 17 billion of social bonds to help finance employment support and so forth. So we've seen, ironically enough, and I think understandably enough, a huge increase in social bond issuance. And actually, if you look at the statistics, for 2020, we've seen a 1,000% increase in social bonds versus maybe about 10% in green bonds. So it has caught up a lot versus the green bond market. And I think that was only and that's certainly something that we would have expected given the move and the diversification across sustainability that we've seen within the fixed income market. It was certainly due for more of a focus.
Fantastic. And Mirabaud recently launched a global climate bond fund. Can you tell us a bit more about that? Why was it launched and what does it invest in?
Yes, so obviously sustainability has a huge raft of different elements that one can look at, and Mirabaud itself has been involved in sustainability and environmental focused investments for quite some time on the equity side. And we certainly have moved to more of an ESG focus on fixed income over time. We just felt that the first thematic fund from our fixed income range should be something that was really relevant. And I think that certainly from our perspective, the climate challenge that we face, and is certainly the challenge that we are seeing more material demonstrations of from what we've seen in Bangladesh more recently. Even the weather in the UK has been far more variable than historical averages would portend. So we felt that the climate side of things was something that we should focus on, and we feel I felt that certainly having a fund that is aimed at addressing and challenging companies' approach to the climate transition was very important. So the fund itself is a hybrid of green and transition bonds. So on the green side, we have those bonds that you well know are ring-fenced or financing specific sustainability projects such as green infrastructure, renewable energy, renewable storage, and those kind of things. And obviously, that is necessary for us to address the climate issue, because you need the infrastructure in order to move to a more sustainable world. And then on the transition side, we felt that, whilst the green bond element answers some of the questions around the climate challenge that we face, one also needs to look at transition. So transition are those companies that are either aligned or semi-aligned with the Paris Agreement accords of net zero by 2000, net zero or sub 2 degrees centigrade. And so from our perspective, engaging with those companies, specifically with the higher emitting companies, is the most important factor, because without getting them on board, there is no target. We're not going to hit these targets. I mean, you can sit and talk about just buying green bonds or just buying the companies that are low carbon, but at the end of the day, it's the higher emitters that we need to be focusing on. So this fund will invest in across global fixed income. We will be looking at those highest emitting sectors as well, such as oil and gas, which I know some of our competition doesn't do, basic materials, consumer cyclicals, and really focusing upon the whole range of companies to try and help to engage with them and challenge them in getting down to this very challenging targets that we have.
Yes, I think it's very important that we are engaging with those high emitters, and it sounds like you have plenty of opportunities to pick from in terms of companies for the portfolio. But what are the challenges for fixed income investors looking to invest sustainably?
Well, it's a good question, and I think it's there's always been a perception that as fixed income investors we have less of a voice, because from an equity perspective, you can have board representation. There's obviously AGMs that you can raise your voice in, as we've seen with ExxonMobil more recently. Equity activist funds who have challenged the company and the direction of the company. I think from a fixed income perspective, we're now understanding that actually we do have a degree of influence as well, insofar as a lot of these companies will need debt financing in the future, and given the changes in regulation and given where we are in terms of the continual need for financing for these companies, so we also have a voice. And so I think the challenges around fixed income investing are twofold. One is to make sure that you do engage with these companies. It's all very well saying that you're going to, but it's having a forum and a process to engage, and being disciplined enough to disinvest or de-invest if the company does not hit the targets that it has set itself. And I think secondly, to make sure that you are actually credibly investing in companies that are focused upon the sustainability challenge. And I think we've talked about, there's a whole argument around greenwashing. Is it acceptable to buy a green bond in a company that is not aligned with the climate accords? Is it acceptable to buy a green bond or a transitional bond that perhaps has very weak targets or threats if they don't fulfill what they've said they're going to achieve? So I think there's a number of things that fixed income investors have to be very careful of, and it's not just a question of buying a green bond or buying a transitional bond. It's actually continuously monitoring, engaging, and analyzing these companies to make sure that they are on the path that we hope they are on. And I think that's really where the main challenge lies, and it's just around discipline, analysis, and credibility to a large extent.
Fantastic, thank you. And what's your overall outlook for this space? And maybe you can tell us briefly about some of Mirabaud's plans.
Sure. Well, I think it's just going to become more and more important. I mean, I don't think it's any coincidence that as regulatory oversight has increased, as governments and countries have begun to focus upon the climate challenge and sustainability more generally, as it has begun to impact, us as a race of people, but not just us, but as the planet itself. I think that it's forcing investors and financial markets to move more quickly than perhaps they were thinking in this direction. So I think that over time, given what I said about financing, credibility, and basically future expectations of companies and countries' economic well-being, this is just going to continue. And we all know that 2030 is not a very long way away, and there's a lot of things to do in the meantime. And we can see already what's the impact of global warming has done to the world. And I think that, without being dramatic, I think that companies and countries are now understanding that, maybe to some extent a little bit late, but that is something that I think is going to continue to be a very large focus, both for investors more generally. For Mirabaud, I think we are definitely going to continue to do what we've been doing for the last several years. We will continue to focus upon ESG as an important factor in our investment processes. We will continue to look at funds like the Global Climate Bond Fund. I mean, we have a number of equity funds already that are quite thematic in their approach. So I think that overall we will just continue to focus upon this. And at the end of the day, we are looking at future generations and future generations of investors. And I think over time, this approach will bear fruit, both from an investor and a company and country perspective.
Great, thank you. And one question we always end the Green Dream on is, what is your favourite sustainable drink or snack?
I don't actually have one. What I would say is that I focus my food intake more on packaging, sustainable packaging. Whether the vegetables or the fruits that we buy are locally produced with more sustainable growing processes. I'm actually have cut down on red meat quite significantly as a result of what's going on. I think my wife is in sustainable fashion, so we are quite a sustainable household already. So I would say there's no one thing, but I think generally we have moved our nutrition and our eating habits to looking more at sustainable packaging, sustainable growth processes, and trying to cut out plastics and greenhouse produced fruit, more seasonality, more local production, that kind of thing. It's a shame actually, because obviously there is a cost involved in that, and I think it would be great to see us see more people have more access to more sustainable produce.
Yeah, completely agree. I mean, ESG is about fairer opportunities for all as well, isn't it? So having the access would be great. And it sounds like I need to have a chat with your wife next as well on sustainable packaging. Well, thank you so much for joining me, Andrew. It's been really great chatting to you.
Thank you very much for your time. Thank you.